Welcome to the Stocks on the Rock show. Whether you like it neat, on the rocks, chilled, or warm, everybody's happier when there's money in their account and a drink in their glass. Let's get started.
Hey everybody, welcome to another edition of Stocks on the Rocks. I'm your host, Chuck Fulkerson. Hope you guys have all having an amazing day. You know, here on Stocks on the Rocks, what we do is we analyze a drink and we analyze a stock. As simple as it can be. And I'm a big believer of if you've got a drink in your hand and money in your account, you're having a good day. So today we're going to analyze a bourbon that has become fairly near and dear to my heart. It is Belle Meade bourbon. Now, Belle Meade to me is a really interesting story. And the reason Belle Meade is an interesting story, a couple of reasons. First of all, it's a Nashville bourbon. Now, Nashville bourbon, why does that matter? Well, I've got kind of a funny story about Nashville and the fact that the first time I went to Nashville, it was probably 9 or 10 years ago, and I was teaching an investing class, and one night, me and one of my friends decided to go out. And we went out to the bars on Broadway and had a lovely, the music was amazing. It was a really good time. And I woke up the next morning and then I remembered, I think we went to a boot store. You know, they've got these boot stores, buy two, get one free. What they don't tell you is, it's the other way around. It's buy one, get two free. And what they don't tell you is the one you buy is like $700. So all I remembered was I woke up the next morning and I said, that was a long night. Oh wait, I have boots. So people to this day, they see that I have boots and they say, oh, you got those because you moved to Texas. Nope, I got them when I didn't live in Texas after a long night in Nashville. But I give props to the marketing people for putting boot stores right next to the bars and leaving them open that late in the evening. But anyway, back to Belle Meade, which is bottled in Nashville. An interesting story about this particular bourbon. Now, this is a sourced bourbon. So this one is sourced and essentially it's finished. Now, it's finished by Charles Nelson, actually started Greenbrier Distillery is what it says on the back of the bottle. And it started in the 1850s, so 1853. So he started Greenbrier Distilling in 1853, started with Belle Meade bourbon, and had been brewed the same way, but then Prohibition happened, right? Prohibition happened, hit the family pretty hard, and they lost they lost the distillery, lost the business. Well, the great-great-great-grandchildren, the descendants of Charles Nelson, I think one was an engineer and one had a different business, they came across this information. They came across their great-great-great-grandfather's distillery kind of by accident, right? They didn't even realize that he was the one who had started the distillery, and so they kicked it back off. And they started off by sourcing bourbons. Now what they do is they actually use 4 barrels per batch, and I think that they source an Indiana bourbon, and they range in age of 6 to 8 years. Now what's kind of neat about that is that each bottle comes from 4 different barrels. Now remember, for bourbon, you know, the rules on bourbon is it has to be at least 51% corn and it has to be aged in a new oak barrel. Well, as long as they're doing it in 4 different barrels, then they're getting a slightly different flavor in each one, and then they put their own finish on it. Now, I have heard recently that they got Grandpappy Nelson's recipe and they're going to start distilling their own whiskey instead of sourcing it out. But I kind of feel like this is done pretty well. Now, I will tell you, let me be honest, when I looked at the bottle, and I thought, that looks like a it's 2 horses over 5 barrels. It's a nice looking bottle, but when I looked at it, I thought, that kind of looks like 1982's bottle of booze. Just kind of had an old school feel to it for me, right? So popping this thing open, you've got a fair amount of, I'll call it berry and cinnamon. Like I'm smelling berry and cinnamon when I just smell it right out of the bottle. Giving it a quick pour into the glass. A little bit of a pour into the glass. I've been known to do heavy pours. It's fairly light in color. All right, holding it up to the light a little bit. It's fairly light in color, and it smells very woody, right? So once I got it out of the bottle, I still smell the berry a little bit, but I smell a tremendous amount of wood and smoke. And so if you just smell this bourbon, it smells like it's going to be meaty, right? It's got this wood and oak smell to it. But then when you take the first sip, it's very different. The oak doesn't come until at the very, very end. And it's almost more like there's a little bit of, that's where I can taste the sour, right? The sour and the oak don't come in until the very, very end. In the beginning, I taste a little bit more of what I smelled at first, right? Kind of the berry notes, a little bit more of the sweetness in the beginning. And then if you allow it to kind of go on the sides of your mouth, it gets a little bit more of almost like a grapefruit flavor, I guess is the best way that I would put it. So it's got like a berry and citrus immediate hit, and then it ends a lot more of the sour. You get a lot more of that sour piece on the back side. And I think that's from the different barrels that they have. That's kind of where the oak comes in my mind. And then it stays in there pretty good. Not a super long finish, kind of goes, stops. I know some bourbons, they've got a really long finish, but this one doesn't have all that long of a finish. So this is our drink this week. It's about a $40 bottle. I mean, so it's fairly well priced. You're not gonna break the bank on Belle Meade. I think it's if you've never had it, it's worth a drink. It's not my favorite. It's not my favorite. It's also, but I would certainly buy another bottle. So, go out, give it if you like that sour taste at the end, then I think this is a good bourbon for you. If you want something that's a lot sweeter and a lot more mellow, this tastes like that in the beginning, and then it kind of sours up at the end. So it's a little bit of a different flavor profile. Now, this is a really, really good example of a Nashville bourbon. When I think Nashville, I think the country. And when I think country, I think John Deere and Caterpillar. So I thought that today we would analyze a stock. And the stock we're going to do today is Caterpillar. So let's start with the story, right? The story about Caterpillar. Caterpillar has been around, started actually, I want to say the late 1880s in the Industrial Revolution. And through different mergers and acquisitions, Caterpillar kind of became what it is today in the early 1900s. Got their name, by the way, from their Caterpillar treads. That's really how they got their name, is the Caterpillar treads on their tractors were similar to the movement of a caterpillar's body. And so they are, heavily invested in multiple countries all around the world. I think about Caterpillar, we think about gigantic tractors, but it's funny enough, if I go through my kids' toy box, I see little versions of Caterpillars, and it's just, it's ingrained in American culture, right? Bright yellow tractors, bright yellow construction vehicles, that's Caterpillar, right? Yellow is Caterpillar, green is John Deere. We'll save that for another day. But thinking about Caterpillar from a fundamental perspective, big picture, a lot of people like Caterpillar because they like the dividend yield. It's a big old, large cap company, big old blue chip. It's going to pay me a yield. I think the dividend yield that it's paying is somewhere north of 3.5% at this point based on the price of the stock. Its earnings per share has slipped a little bit recently, but when I look at Caterpillar from a fundamental perspective, one thing that scares me, first of all, we'll talk about the technicals in a minute, but from a technical perspective, it's been in a pretty big downtrend. But when I talk about it from a fundamental perspective, here's my biggest fear about Caterpillar. First of all, they did a lot of business. They've done a lot of business in India and in China and in Asia and in Europe, and they've got a lot of business outside of the U.S. To me, Caterpillar's biggest risk right now is the businesses outside of the U.S. due to the strength of the U.S. dollar. And I'm afraid of the next earnings report when they repatriate those dollars. What is that going to do to the earnings statement of the stock? They're already coming off of lower earnings the prior quarter than they had the one before that. And so a lowering in earnings yet again due to the repatriation. Remember, as the dollar gets higher, when they sell items in other countries and they repatriate those back to dollars, they're going to repatriate those back to less dollars, right? So to me, that's going to have an impact in their overall fundamental picture. in a stock that's already been in a pretty predominant downtrend. So this is something I am a little bit concerned with from a pure fundamental perspective of the company. Do I think Caterpillar's going anywhere? No. But when I look at it, I look at all overall that it is what's happening from a fundamental perspective of the other countries. It's in a bigger picture downward trend. And the other side is there is a fair amount of fear about potential global recession. And I've heard that all over the place. And is that stemming the tide of construction? Because if that stems the tide of construction, Caterpillar's money is made not only in selling new equipment, but also servicing said equipment. So what is that going to do if there's not as much business that's happening? So now looking at it from a fundamental side, starting on a weekly chart, I already talked about the fact that we're already in a bigger picture weekly downtrend. And kind of looking at that bigger picture weekly downtrend, we've got these areas that are below us that tend to be areas of support where we've kind of bounced off of, but putting in those consecutive lower highs as prices continue to get lower. And so moving down to, say, a daily chart, we can see that we've hit a little bit of a support level, but there's definitely some supply up above us. Now, if you look up above us, there's this area where buyers and sellers were equal, and we consider that a fair price value area. And if price returns into there could be a pile of sell orders where people are gathered, where there's an opportunity to get short somewhere in there. Now, if you do get short in there, and frankly, it might actually not make it all the way back up to there, how do I play it? So you can play it with an actual short on the stock itself. Another viable way to do it is to look at the option. Now, I don't often look at what's called put to call ratio. So for those of you that are unfamiliar, put to call ratio is the number of puts that are had on a stock versus the number of calls. And when I look at the put to call ratio, I actually went all the way out to January of next year. And what I found was a humongous put to call ratio in the January 100 strikes, to the tune of 10,000 contracts of puts versus 400 contracts of calls. Now, this is the open interest. We don't know if this was bought to open or sold to open, right? Well, obviously it was both because somebody had to buy and sell. Now, if you buy it to open, that means that you essentially think the markets are going to go down, or you're insuring your position. What if they sold it to open, right? Well, that's because they want to acquire the stock at 100. So I'm looking at it, looking at that as the January that's a good potential area where the stock could fall to between now and then. But what are your thoughts? Leave your comments down below. I'd love to hear your comments and your thoughts about Caterpillar and what it's doing, because that's really what it comes to, right? For every buyer, there has to be a seller. For every seller, there has to be a buyer. And so my thoughts are, overall, I'm a bit more bearish than I am bullish on Caterpillar. I feel like the fundamentals combined with the technicals tell us that the better opportunities are at the downside, especially over the next few months. But once again, leave your comments in the area below. And don't forget to try your Belle Meade Bourbon. And don't forget to hit that like button, smash that like button. Make sure you subscribe to the channel. Thank you so much, everybody, and we will see you next week. Stocks on the Rocks. Have a drink in your hand.